Hi, and welcome back to Slot Leader, a Cardano finance podcast where we try to bridge the gap between the world of finance and the world of blockchain technology. I'm your host, Umed Saidov, and in today's episode, we are keeping true to our tradition and bringing somebody from the traditional finance background to talk about his experience in educating the blockchain, the traditional financial professionals about the blockchain technology. His name is Bobby Henebry, and I met him in 2017 when I started writing about the blockchain technology and its potential on the CFA blog. And we ever since started keeping in touch, and he has been sharing his experience over the years. And I thought I would bring him back to talk to him, and the purpose of this conversation is just to basically get a temperature check with him to see how things have transitioned from the time when he was giving the lectures about the blockchain and the Bitcoin, and what type of questions and what kind of engagement he's getting in his speaking arrangements. He is a prominent member of the CFA society. He works at the hedge fund in his day job, but he's very passionate about blockchain technology. He is appearing in this program in our podcast as in his personal capacity so anything that he says is coming from Bobby Henebry, the person, rather than a professional working at a hedge fund. So I hope this interview is going to be useful to you. There's a lot of interesting questions. There's two parts to the interview, so stay tuned for the next part next week. But I hope you enjoy it. It's a great way to understand what kind of questions the traditional finance professionals are asking, and what kind of frameworks they are using in order to evaluate digital assets and think about them. So stay tuned. We have a lot of interesting questions and answers and insights coming your way. Today's episode is going to be the last episode of year 2020. And with that, I would like to thank everybody who's been watching and listening to our podcast, and wish you a Merry Christmas and a Happy New Year. The next episode we will air in year 2021, and hopefully we will have a much better year 2021 than we've had 2020. Everybody, it looks like, wants to be done with this year and start from a clean slate. So Happy New Year again. Merry Christmas for those who celebrate, and thank you for being an active listener and a viewer of Slot Leader. If you are a Cardano stakeholder who would like to support this podcast, you may do so by delegating your stake to Skylight Pool. Skylight Pool is a professionally managed Cardano stake pool that's been there since the ITN, and we've produced a lot of blocks and a lot of great rewards for our stakeholders. So if you're looking for a pool to delegate to and you like the type of content that we're putting together, you might want to consider our pools. The tickers are Sky and Sky2. As always, I would like to remind our viewers and listeners that Slot Leader is an educational podcast, and as such, we do not provide investment, financial, tax, or legal advice. Today is December 27th, 2020, and looking at the past week, there are two events that caught my attention, and one of them is the SEC's charges against the Ripple, the company, and XRP being considered security by this very agency. Now, these charges have been disputed by Ripple. We'll see what the courts will say, but they are quite significant in their nature, and if proven correctly, might set a precedent for this space. So the essence of those charges is basically Ripple running an unregistered security sales and raising $1.3 billion as a result over many years. So those are quite heavy, quite significant charges. I don't know where this lawsuit will go, but it will be interesting to watch, again, this space. On another news, we've seen the Bitcoin price go up quite significantly, and despite the fact that we've seen the XRP lawsuit brought about by the SEC, the whole market started rallying around Bitcoin, and we've seen some significant improvement in the price. As we stand today, 27th, Bitcoin price is at $27,000, and there's a lot of talks about it going up by $1,000 each day until December 21st. Oh, 31st. So we'll see what happens. So when it comes to Cardano, this week has been quiet, and that's understandable. Everybody is going on vacations, and it's a holiday season. But despite the fact that there's a lot of holidays around the world, the GitHub commits in Cardano project are still going on, and Cardano is still number one there. For those of you who don't know, GitHub commits are basically a proxy used in this space to evaluate the quality of development or the pace of development, I would say, of blockchain projects. And when it comes to Cardano, it has been number one for quite a while, and hopefully we will see these GitHub commits culminate in major releases down the road in January and February next year. Hi, everybody. Today, our guest is Bobby Henebry. He is one of the fellow CFA charter holders who I met in Washington, D.C. He reached out to me after reading my blog post on cryptocurrencies. He is an entrepreneur. He's a well-traveled person. He's been to more than 55 countries, and he's an avid guitar player. Also, last but not least, he is he works as a hedge fund manager. He has a wealth of experience in the traditional side of financial sector. So welcome to the Slot Leader, Bobby. It's great to have you here.
It's good to be here, my friend. Thanks for having me, and I'm looking forward to nerding out with you and our friends in the community.
Yes, yeah. So why don't we get right into it? Bobby, you are a fellow CFA charter holder, and I know you have a deep experience in the hedge fund industry. From that angle, can you tell us what attracted you to the digital assets?
Yeah, no, thank you for that. And it's good to be together. And there's a couple things in that question. Uh, First off, what I'm sharing is just kind of my personal opinion. It doesn't represent any funds or firms I'm involved with, and I don't know everyone's personal situation out there. So you got to kind of handicap anything I say for your personal situation. But I'm just sharing kind of my educational experience from traveling the world and working both in asset managements, as you said, in traditional kind of portfolio management. I've been a partner in two firms, work with family offices, individuals, but kind of taking that traditional kind of equity analysis lens, and then separate from that saying, all right, what's happening in this ecosystem? And I just got fascinated with it early on, blockchain and crypto. And I've just done that on my own as an entrepreneur. And so how I got involved initially was a good friend of mine for years. Every holiday we'd get together around, it's Christmas this week, and so I'm reminded of this story. And he's a super libertarian guy, very much not a fan of central banks, and he's a big fan of Bitcoin. And he would just talk about it and we get in these big debates about monetary policy and Bitcoin. And so I'd been exposed to it through a friend, and then going to work in New York a lot. Occasionally I'd meet people that were traders in currencies, and some of the guys would be like, I'm buying some Bitcoin. And so I watched it. And then another friend of mine was a miner, and another neighbor of mine was a miner. And back in 2016, I went to a conference and saw somebody speaking on it. And I was like, you know what? I think I'm going to invest. And then it was how? Do I just go long some of the currencies? Do I hire a friend of mine who had a small fund and use that? Or do I become a miner? And the short of it is, in 2016, late 2016, I chose to set up a mining rig, an Ethereum mining rig, with my friend Ben, who's a brilliant guy in the space. He helped set it up. And so I was an early adopter as a miner, and then it all took off. I bought a few more mining rigs, and I was a miner in Ethereum, and then all my financial planning friends started saying, "Hey, what's going on? My clients are asking about Bitcoin?" And so I kind of informally got into the speaking business, and as I traveled, I started sharing my perspective as kind of a liaison between the nerdy community in crypto and the traditional business community. And how do I use what I've learned in mining to help my friends in the financial circles really make sense of it? And then the nerds in the space, how do I help them make sense of how traditional investments work and raising capital and forming funds? So I just kind of put myself in the middle as an educator, and that's kind of how I got in the space.
Now, you have been doing this educational sort of presentations for a long time. Sort of, as far as I remember, so you've been doing it since 2017.
Yep.
Have you seen an evolution of mindset among the audiences that you present to? I know you present to the CFA Society, you present to the institutional investors, a lot of whom might be thinking about entering this space professionally. Have you seen any evolution in their thinking, maybe through the questions as a proxy?
Yeah, no, I have. I've seen in an evolution with. I mean, it's kind of there's early adopters and laggards with any kind of technology, and so the early adopters, they're as excited as ever, and then on the margin, there are more people that are coming into the conversation. That said, there are also just some inherent bears or skeptics on the space, and they have very well thought out reasons as to why they're skeptical. On certain points, I disagree with them. On a number of my points, they disagree with me, and that's fine. And it's all about creating a market and a conversation, effectively, about where this has a place in different societies and platforms and whatnot, and portfolios too. And it's not for everyone, and I respect that. And so on the institutional side, though, I think well, early on, a lot of people just said, "Hey, Bitcoin is just for bad things, dark market activity." And yes, there has been, and there continues to be activity there. There has also been a lot of activity that has gone through the U.S. dollar and other currencies, but that doesn't mean those currencies are inherently bad, right? It's just there are bad people that will always find ways to do bad things, and they shouldn't. And I do not want to justify their behavior at all. That said, I think there's a lot more good people that want to leverage crypto in ways, like to transfer money to their friends in Africa or their family in Africa for people that can handle the other risks. And so I think there's a little bit more adoption for the average person. There's also more adoption for institutions where the biggest concern has been custody, because there's a lot of these headlines about, crypto broker or fund goes under, or the CEO dies with the password and people can't access their fund. That's a governance issue, right? And so there's a lot of people that are trying to figure out, all right, what are the governance structures that need to be around a fund or an institution that's custodying? And then, Coinbase has more of an institutional platform. Fidelity Digital Assets has chosen to lead the charge, I think, for traditional institutions on how do they get in the space. And I'm sure there's a lot of conversations on, well, how do we insure it if things go wrong? I mean, I was the target of a SIM swap last year where somebody steals your phone number or SIM to effectively act as two-factor authentication to try and get in and steal your stuff. I mean, there's a lot of challenges in the space, and institutions have a very high threshold and I for how they get in, and they're figuring that out, those that want to be in the space. So that conversation has evolved both for individual adoption, but also for institutional adoption. And I'll stop on that. I'm curious, kind of your reactions, but I've certainly seen an evolution in the space.
Yes. So what I'm seeing is that you have basically you have gone out and presented in front of many crowds, right? In the past and now.
Yep.
And I'm just curious to know what were the types of questions that you would get in 2017 and what you getting right now. Is it fair to say that before people would be asking more fundamental questions like, what is Bitcoin? Why does it have value, kind of thing? Whereas right now they might say, okay, it has value, but how do I get in? And these are the types of things that are impediments for me to get in and allocate to this space. And how do I solve them? Is this, I don't want to put words into your mouth, but I just want to know, have you seen an evolution in the types of questions you get from the institutional investors?
Yeah, and may I share one slide on this point? Is that all right? Do we have screen share?
Absolutely, absolutely.
Okay.
Let me see if I can give you access.
And while you enable it, yes, early on there was much more skepticism. Hey, this is only for drugs and guns and all that. And every presentation, and I presented, I don't know, 15 countries, probably 20 in the virtual realm around the world, from Uzbekistan, Tajikistan, Jordan, Egypt, Canada, the U.S., Cayman. I mean, I've been to a lot of places and talked to a lot of people about this. And early on, one of the biggest issues is this right here. is a conflation. Whenever anybody on the institutional side, especially thought they heard Bitcoin, crypto, or blockchain, they thought it was all the same thing. They were like, "Oh, it's no, it's not. Bitcoin is one digital asset that uses a blockchain, right? So that's the infrastructure that it's on." And then other people saw limitations of Bitcoin, and then there were all these other, well, what about inflation characteristics, faster transaction times? Then other people saw, well, gosh, what other things can we put on a blockchain? And I think that's what was really happening in 2017 and 18 that fueled it. Is like, God, it's not just Bitcoin. How do we put, individual records or property rights, medical record, whatever, or references to those records on blockchains? So I think the evolution, people have started to say, oh God, well, what else is there outside of Bitcoin? What other cryptocurrencies are there? What other themes are there? And so now I'm getting more questions that are not just, oh, is Bitcoin good or bad? It's, okay, what else is in this ecosystem and why is it so diverse? Okay. And from the institutional money managers, I think that comes from a portfolio management lens, which you and I have a lot of experience in our investment backgrounds of, okay, well, how do I stay diversified in an asset class? What themes do I choose to invest in? And how do I weight them? And so there's more discussions about this second circle, the broader crypto. And then there's a lot more startup companies that I just still get introduced to, and people just talk, say, hey, what do you think of this idea? And so I share my informal perspective on it, on how else can we apply it and where should it be used. So in a way, from left to right on this chart, there's an evolution from, oh, it's just Bitcoin and it's good or bad, to really the richness that exists in the ecosystem that you understand and others. And so I've appreciated that. That shows a more natural interest in the space.
All right. Now, if you have any other thoughts about that, we can talk about this. But I wanted to
Sure.
go back to your experience with mining. Why did you get in there? Why did you get into mining Ethereum? What was
Yeah.
where did you see the value in crypto, Ethereum in particular? When you looked at it, what triggered in your mind as a traditional financial professional that there might be some sort of inherent value and you need to get into this space and start mining?
Yeah. Well, it's the story is kind of funny on how I got in. Like I said, I'd been talking to a friend of mine for 4 or 5 years, my neighbor, and so I just kept hearing it, and there were articles in The Economist on it, and I was just like, early on, I made the mistake of just assuming Bitcoin was just digital gold, and just wanted to end the central bank. And there are some people that have that opinion, and I'm not going to comment on that. I totally missed the blockchain applications. And then I was at a conference in mid 2016, and the room was full of people that were like 50 to 75 years old. And there was a blockchain speaker, and everybody was kind of excited. And I was like, I'm in a room full of all of these septuagenarians, people in their 70s is kind of the joke in my mind. They're paying attention to it. I've been paying attention to it for 4 years, and I haven't done anything. I should do something. So I just made a choice for my personal risk appetite to get in. I can't speak to people in the audience for them, and it's a different environment now than it was in 2016. And another friend of mine had been trading in the space for 2 years, and I talked to him. He was at that conference, and he'd made a lot of money, and he'd lost a lot of money, and he was done. He was like, I gotta move on from the risk, because he'd been whipsawed, and that happens in the space. Okay, there's a lot of risk and uncertainty too. And at the same time, there are more people today than back then. And so I just was like, if I come in, gosh, do I want to be in a fund? Do I want to go long? Or I chose to mine. And I chose to mine because a good friend of mine, Ben, had been mining for years. And I scheduled a whole day talking with him and really teasing out the ecosystem. What do I understand? And you need to do that if you're interested in this space. Like, there's a lot of education you need to figure out for yourself. And then I came out saying, all right, well, I'll just do a conservative investment of just a mining rig, $2,000 for the rig. I'm not going to put a whole bunch of money, and I didn't have a lot of money, to be honest. And like, that seemed too risky for me. So I'm going to put a little bit in, and I'm going to mine, which is kind of dollar cost averaging in, where you're buying at the marginal cost of electricity, or effectively, if you're doing it right, you're buying at a discount to whatever the spot rate is in the market, right? So if Ethereum at the time was $10, and I got one Ethereum every other day, well, I would spend $2 on electricity a day, depending on if it's summer or winter. It could be $3 or $1. So if I'm going to spend $2 over 2 days, that's $4 to get a $10 asset. I'll spend $4 to buy a $10 asset. Yeah, that's cool. I
Yeah.
can buy a couple of lattes,
I,
right?
I I I tend to think about it right now that I'm doing I am a pool operator in Cardano. I tend to think about it as the same sort of in the same metric. The thought
Yeah.
actually occurred to me a couple of days ago that the pool operators, if they don't sell, they are actually acquiring ADA for at a discount, depending on what their setup is, of course.
Yeah,
But
and different people have marginal costs of electricity, whether they're at a residence like me or in a commercial operation, they can get lower cost per kilowatt hour. And so I chose to make an entrepreneurial investment in the space, and I had a capital expenditure of the mining rig, I had a variable cost of electricity, and there was enough revenue, and I chose to hold the currency as an investment. So I was slowly buying it up rather than just buying in a big chunk. Now that was a mistake with the benefit of hindsight. I should have put, a lot in, but today is different, and I cannot speak to where it's going to from today. But I did choose to shut down my mining rig 2 years ago because for me, my marginal cost of electricity got to the point where the price came down and the price went below my marginal cost of electricity. Okay, and so then I was left to say, all right, I got to shut off my mining rigs because I've been priced out of the market effectively. Okay, and so everybody's got different math on whether they go in to mine or not. And today is a totally different mindset and kind of risk trade off relative to where we were previously. But that's how I got in. It was interesting for a while, and I'm glad I did it. But I am not in it right now in the mining front. So
we've seen some interesting sort of developments this year with PayPal and Square entering the space. Now you can buy cryptocurrencies on your PayPal account with a click of a button on PayPal app. Do you think the mainstream consumer going forward will be more exposed to the added benefits of the blockchain technology? And how do you think that will play out, especially on the adoption side?
this is my personal opinion, uh, and I cannot predict the future. That said, I believe there is going to be more adoption. There is still concern about price volatility, and some people choose to transact and hold the currency. Some people choose to transact and then immediately go from crypto to fiat, so as to kind of mitigate any currency fluctuations. And so you'll see different solutions there depending on the individual. But I think they're just will continue, especially with Square and PayPal being in the space, if they stay in the space, right? I mean, there are other examples. I believe Overstock.com was very in early, and then they kind of moved back a bit, and and even the whole Libra discussion, gung ho about Libra, and people got in the consortium, and then people left. There's going to be some of that, a step forward, a step back, or some people maybe a step back and then two steps forward based on kind of how they're designing their vision for their company. And there's an interview on CNBC with the PayPal CEO that's very interesting, where he just really is quite transparent about where he believes things are going and why they need to have a foot in the space and how they can provide that service for the merchants out there around the world who feel like that's a good solution. Because in America, where I live and where you are currently, I think we miss the point because we have a really good governance structure. It's not always perfect, but a pretty good governance structure in America. And we have a very stable currency. Yes, there's inflation and concerns, but other countries, especially on the emerging market end of the spectrum, man, it is. I mean, Lebanon currency is off 80% even before the explosion in August. They've got capital controls in place. People in Lebanon are accusing their government of having a Ponzi scheme in place, and now they're caught holding the bag. Well, in that case, the currency is off 80%. Crypto
Is very
in that
stable.
period of time has actually been less volatile to the downside relative to the Lebanese currency. So there's different lenses and different life experiences, both on the currency side and also on kind of other kind of blockchain adoption. And I think that's one of the reasons why, especially these multinational firms and currency and PayPal, Square, and others, they see these opportunities and say, gosh, maybe we should have a position in that and provide it for the market of people that choose to use it or not. Because ultimately, it's on the market and people to choose whether or not cryptocurrencies, digital assets, are a better solution than fiat in certain situations. And there's a range of opinions on that.
No, absolutely. I mean, when I looked in this space, and I looked at it very deeply, I came out of the rabbit hole thinking that it disrupts a lot of things, especially
Yeah.
open blockchain technology, which is the most secure way of keeping your records.
Yeah.
There are talks about enterprise blockchain. I honestly think that it's a misnomer. It just doesn't within the scale of a single corporation. Blockchain does not make sense at all because there are better. It's all ultimately it's all about governance and control. And
Yeah.
blockchain was devised to withstand and keep operating in a very hostile environment where you could get attacked, and your network could be subjected to various nefarious actors trying to undermine it. And that was the reason why it was slow, why the proof of work was required to do. But in essence, we evolved from there. We evolved from proof of work being a necessary sort of evil required to secure a network to something like Cardano, where the proof of stake is based on the same fundamental sound principles of it basically goes back to the idea of randomness and whether that randomness sourced by the network is actual randomness or can be compromised. And, in the case of Cardano, the scientists, the cryptographers basically went to the drawing board. They looked at Bitcoin, formally specified its properties, and they said, can we create something that's better but does not require the electricity of country of Iceland to run? And yes, they came up with a solution. And it's not a solution that was devised in somebody's garage and they decided, hey, this is the better solution. They actually went to cryptography conferences, which is a very sort of high threshold for these kind of protocols, and presented their papers. And then they got criticized, they got feedback, they improved upon them. And based on those papers, they built Cardano the way that it is now, which is more secure, as secure as proof of work, but faster, and it does not require you to invest in mining rigs that could become obsolete. All you need to participate in the ecosystem is to buy the token, and the token itself and its distribution is used in order to source that randomness. I guess the reason why I'm talking about this is that the value proposition of cryptographic sort of digital assets, it stems from its diversity, its global reach, and its openness. The blockchain is an open sort of ecosystem, and there's not a whole lot of people who get that idea that you cannot have an enterprise blockchain and then say, okay, we tick the box here and we are modern and we're with keeping up with the modern times, and we have this blockchain thing that's running on our servers within this single organization. It just doesn't make sense in my opinion. And the only way to leverage and use blockchain is to use it in the open form. So with that being said, have you thought about the value proposition of blockchain, open blockchain, and what are its five main sort of selling points?
Yeah. And there's a lot that you shared in it that I think it'll take a
Okay.
few podcasts to
Yeah.
discuss, which I totally respect. And this for those of you that are in the space, a lot of you have opinions, and I respect that. And there's a range of opinions. And for those of you new to the space, the more you dig in, just the more you realize how diverse and robust the discussions are, and intense sometimes too. And and just real quick on something you shared too on there's also a lot of people think blockchain is a database, and it's not. Blockchain, there are hashes, kind of alphanumeric codes that are effectively stored on blockchains because it's kind of a record. And then people are, well, I don't want my medical record, and of course I wouldn't want some of my personal information public. But there's a database serves a different purpose than a blockchain for recording transactions and distributed ledger ownership, so the my rights in something or certain reference to information doesn't get deleted by a central authority that may have an intent that's not fair for me, right? And so those are kind of things you're touching on that I want to flesh out and just acknowledge.
Yeah.
and also just the whole debate between does proof of work versus proof of stake, and there are very strong opinions on all sides of that. And there's also a spectrum from fully centralized authority to fully decentralized, which I think directly is where the proof of work folks are. And I was proof of work through mining. And then there's limitations in proof of work, the expense, the electricity, environmental impact, all fair points. And then you move to more proof of stake, and in a way is somewhat more centralized. And the purists say, well, that's bad. That gets us closer to central bank. And I'm not saying it's right or wrong. I'm just saying these are the nature of the debates. And all that said, on what I think, are five kind of benefits of blockchain in general, open source and whatnot, is first off, it's the borderless democratization of currency and also, digital assets and how they're recorded. Okay, where there's not a central government that dictates the rules of what happens in these borders, and and in general, there's a lot of countries that are acting in the interests of their people, and there are other countries on a spectrum that are not acting in the interests of the people. It's about the central authority. Okay, and so what the whole crypto and blockchain conversation creates is something that is an option outside of that traditional central country lens. And let's, as people across the world who have different opinions and interests, let's come together in a market and choose to transact in this or not. That's the democratization, and that's borderless of what the currency and blockchain represents, which I think is fascinating. And as a part of that, that's also a financial inclusion, right? So there are certain people that may not have been included in their local market or system that now through blockchain and crypto can get in. Another point is, like I teased out earlier, is this whole kind of emerging market compared to developed market. Is a lot of people in developed markets take for granted what blockchain and cryptocurrencies, digital assets offer, not just in the currency side, but also in personal identification, property rights, other things that are common themes, supply chain and other. And so having that kind of open source, distributed, more transparent ledger, whether it's a proof of work or proof of stake, is something that in certain markets is valuable. And that's why people pay attention, because especially in, whether it's Zimbabwe or Lebanon currently, or Uzbekistan went through a whole currency devaluation years ago, and as their leadership changed, the currency was off, roughly 50%. That's a different kind of context than us in America with a relatively stable dollar. Okay, so that's another reason that it's important. The other, go ahead. Please,
No,
please.
just something came to my mind, and I wanted to get your opinion on this. I think the centralization of governance of of money printing or money supply, especially unchecked, especially in emerging markets, creates what risks, in the sense that you might have a stable currency as a state for a long time, and then when it goes wrong really bad, in a very cliff-like sort of fashion. You mentioned Lebanon. Now, in those situations, wouldn't it be prudent to have a part of your assets in an open blockchain, open digital asset, have them as digital assets on an open blockchain? Because otherwise you do not have access to, put your dollars in a US bank account. You can't, if you're in Lebanon, you cannot just go and open a bank account in the United States, unless you have millions of dollars and the bankers are knocking on your door and asking you to open a Swiss account or US bank account or whatnot. So do you think for an average person, especially given how cheap it is to open a account on a digital asset, it doesn't cost anything, it's a prudent strategy and a safer strategy to just basically hedge their bets? I mean, I remember when Soviet Union fell apart, and I have mentioned this many times. My parents, who worked for this monolithic sort of structure for all their lives and believed in it and whatnot, because they had no other sources of information, when it fell apart, it was devastating. I mean, imagine you working for a long time and having a nest egg, and then all of a sudden that goes to zero when you are 60 or 65, and you have to start it all over again. And that was devastating. And imagine if they had access to Bitcoin or Ethereum, or Cardano for that matter, right?
Yep.
The situation would have been a completely different. Maybe we wouldn't even have gotten to that point. You see, I think the governments, especially non-democratic ones, and let's just be honest, in democracies, like it or not, people like to get elected. They like to listen to their constituents, and that is a function of how well they're serving them. In emerging markets, where there isn't the feedback mechanism is broken like that, you will have you know. Uh, governments that will go in the direction that's not good for the entire population, and then once and they will go there until things break down. And in these situations, do you think it's prudent for people to have a way out? And maybe if the governments realize that there is an option out there for their population to opt out of their system, they would behave. So do you think that cryptocurrencies and digital assets specifically could introduce a counterbalance in the absence of democratic processes, could replace those in emerging markets?
Yeah, no, there's a lot in there, and at the highest level, I would say, and you bring up some very valid points, and I want to share some other caveats too. At the highest level, diversification is a generally accepted good thing in your financial affairs. Okay, whether it's your income stream or what your portfolio is, not everybody has the good fortune to actually have savings, right? And so a lot of people just kind of live in paycheck to paycheck, and a conversation for that individual would be different. I would say those that have savings, it's the more you're diversified, whether it's listed equities, fixed income, real assets, maybe you want to have inflation hedges, gold, Bitcoin, other things like that. But certainly being more diversified helps protect you from the uncertainty of life, which, as you shared in a very personal way, your family history and where you're from in Tajikistan. And, and I've seen a number of friends that have been impacted that certainly would love to have more diversity. And I have seen in situations where they have asked and have wanted, and I think it is appropriate for them to have some sort of cryptocurrency as a hedge. Okay. That depends on your personal situation. But yeah, personally in my portfolio, I've held Bitcoin and Ethereum, and I'm a long-term holder of it. I mean, I've been in since 2016. I like to think that I will continue to hold it. At the same time, that's when it runs up. I may take some out and reallocate it and rebalance in my portfolio to say what's the risk I have to the asset. And I saw people back in 2017 that were all in and had a significant amount, and then it crashed and they didn't have as much, and they should have been diversifying. If you got 90% of your assets in crypto, you should probably be diversifying towards other assets, right? Well,
Yep.
if you have 0% in crypto and you're in an environment where maybe there's some political or other uncertainty, I think certainly having some allocation there could make sense. But that said, yeah, in many accounts it can be free to open up, but there are different trading platforms in different countries with different rules, and that depends on who's listening and where they're from. And there are different trading fees to go from fiat currency, your traditional currency, into crypto, and sometimes there could be fees to go from crypto to crypto. It depends, right? And so you got to understand that all that for you. And then, like I said, the custody thing is also a concern. And you need to be sure that wherever you have it, that you have your passwords safe. They're not in places where somebody can hack in, because there are bad actors out there who are intentionally trying to get in and steal your assets. Okay, like I said, I woke up one morning, I found out my phone wasn't working. Somebody at 3 a.m. had a new SIM card issued for my phone number, as if they were me at a store saying, "Hey, I dropped my phone in a lake and I need a new SIM card." They used that to try and break into my email account and other things where they thought I had cryptocurrencies, and I didn't. They're in a different place that I will not discuss, obviously, because this is a public forum. But there is a very real risk that even though you're diversified, there are bad actors that could come in and take. And that's kind of a governance and custody issue on top of the wrapper. So you need to think about your situation and where you store your assets and how you're diversified. And all I can do is speak for me personally. I personally have held it as a diversified holding in my portfolio because I think that makes sense for me.
Yes. Yeah, no, that's absolutely true. And as the space grows, I think we are discovering as we go new use cases for this technology.
Yeah,
I can tell you from my experience with Cardano, I am very deep into this project because I got exposed to it as a paper. When I moved from Bitcoin
yeah,
to Ethereum, Ethereum was a
yeah.
great idea until I realized that there is going to be inherently a cap on transaction per second, and that's something that is inherent to proof of work, and you will never be able to go around it if you want to keep decentralized. So and that got me exposed to Cardano, which was scientifically designed and scientifically proven, and I started following this project. So as we move in time, we are discovering new ways and avenues to basically find applications for this technology. And one of them is actually having an identity. I touched upon this in my recent AMA with my viewers and listeners, uh, and 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 that was basically we talked about identity. You and I know that our social securities, our addresses are out there because Equifax got hacked, and and in this structure of in in entrusting your identity and personally identifiable information that could be used in order to open a bank account and do nefarious things on your behalf is out there. um, should we be thinking about changing the entire infrastructure to a more robust infrastructure that will allow every individual to be the owner of that identity, and the corporations and the banks and whoever comes in contact with you through their business dealings actually requesting you to share that information? And once you share that information is shared for a certain period of time, and it's not imprinted on somebody's servers that could get hacked or become honeypots. Do you think we should move? This is a fundamental question in that regard, and then I will elaborate on that. But do you think that inherently, even in the developed markets, we are getting to a point where the technologies that were devised in 1970s or 1950s and 60s are actually creating tectonic shifts or actually, you know, they are creating honeypots because you need centralization in order to make things effective, for the system to work. And in the age of internet, they are creating undue risks for entire countries.
Yeah. No, I think directionally, I think us as individuals having more ownership for how our data is used, I think that makes sense. And I think there is understandably a lot of demand for that. At the same time, there's a lot of resistance from the people that are using the data and the way they use it. And so you're going to find resistance. And there's a healthy discussion about directionally how do we as individuals kind of take back more control over our kind of personal information. And so as a result, I think uh, blockchains provide that um, forum, and also on a range of spectrums of country to central authority to distributed kind of democracy and governance for the population is more important. I think on that spectrum, especially to the central authority, there's naturally more resistance and there's more need for that. Okay, and so not knowing where each individual on this podcast is coming from, I can see where some would be like, "Oh no, I don't need it," and some people are like, "Yes." Okay, and so for those that are interested, I think just you dig more into the ecosystem and find out where these solutions are. Because what's fascinating about the space, and in a way what brings Umed and myself together, is we both just inherently had an interest, nerding out in it. And you were writing in the space. I started kind of mining and then speaking and then kind of writing. And I've had some articles published too. And you find like-minded people, and then you start saying, well, what are you doing? And there's a lot of camaraderie in the space. There's also a lot of debate in the space inside the community. And there's a range of kind of robust, also kind of some people that are a little intellectually elite, I observe. And I would say, hey, how do we all come together more and have the meaningful conversations about if we're trying to solve this to make the world a better place and have people have ownership over their property rights, their identification, or provide people that are not able to access traditional banking systems or their own assets in certain cases, how do we become a vessel for those solutions? And that's what's so fascinating about the entrepreneurship side of things is all these different solutions. So yes, I think there is space for that for what you're talking about on identification in a range of things, and also there's a range of things we can't even expect that are risks and other headwinds, and that's the same for any new industry, any nascent technology. There's always the unexpected. And even though blockchain and crypto, it keeps perking up and then gets beat down and comes back, but it creates conversations about the limitations and the constant prototyping for all the coins, all the blockchains, and all the people in the system that they can learn and build on, just to provide better and more robust solutions in the face of still a lot of uncertainty in the world. I think that's important, and I think that's what you're touching on with your question.
Yeah, you actually touched upon a very interesting sort of topic here, that this space has created a vibrant community where we are prototyping as we go. And you don't get that luxury in financial markets, which are quite regulated. In a sense, I think I'm sure that this popped up naturally, but this would be the best way to basically try to find new ways of conducting or innovating the financial ecosystem as a whole.
Mm-hmm.
And, you know, I think the humanity, the ecosystems of the world are better off as a result of crypto actually existing, because at the very least, they force people who are in the current traditional rails to look back and say, are we efficient?
Yep.
Right, at the very least, there are the talks, and there's this narrative that I don't agree with. You might have a different opinion, Bobby, but there's this narrative saying that, hey, we don't need blockchain that much because we've got all this great infrastructure out there. I mean, I agree, right? We have all the great infrastructure that works,
Yeah.
right? But it required a lot of time, a lot of investments up front, and not a lot of good governance to be put in place in order for things to work. I buy shares, right? I click a couple of clicks on TD
Yep.
Ameritrade app.
Yep.
I own shares. How do I know that I own shares? I have the institution behind that app sort of giving me that confidence that my shares are somewhere out there. There's a slew of companies out there, from custodians to people who are maintaining that trading app, working together to make sure that I am given that experience of
And the regulators on top making sure that they are good actors for the benefit of the consumers and the economies, right? And that, so all of that comes together, and it creates a system that is the way it is for the reasons it is, and just replacing it overnight isn't going to happen, and it shouldn't happen. But there's room for how to kind of blockchain or other solutions, technology solutions, come in to help supplement and build upon the existing solutions, right? And that's what's fascinating about what's happening now on the range of adoption that is or isn't happening for various reasons.
Yes. Here's what I think, Bobby. I think blockchain, especially the open kind, completely decimates the costs of some, entire industries that exist right now. They are serving
Yep.
the need of the population. Well,
Yep.
let's just take a very simple money transfers, cross border, MoneyGram, Western Union. If you think about it, they have been completely disintermediated. They do not need to exist, in a sense that as long as you have an off ramp and on ramp to digital to fiat currencies of your choice, you don't need them. And currently, if you go that route, if you use them, and I'm not accusing them of being bad actors or whatnot. It's just that they have been built on current rails, on current financial infrastructure. They have to pay a lot of fees every time
Yeah.
they open up a correspondent account in a country of the corresponding where they want to send the money or have that business. And that amounts to a significant amount. It amounts to like 20%, right? In some cases. So when I think about blockchain, and I think about its applications, it becomes quite clear that a lot of the intermediaries, and I'm talking about corporations that exist currently, they don't need to exist. Um, if the blockchain is adopted. And that's what makes it scary for countries, developed countries especially, because it directly threatens their business models or economic models. Let's just basically do a thought process. Let's say that tomorrow everything is blockchain, is based on blockchain, right? And it's an open kind. Um, where do you think the value that used to accrue will accrue in that environment? And my sense is that if you go that route, just the way that we went with internet itself, it will accrue to the players that build on top of the blockchain in terms of dApps, because the future of economic activity will probably live in ether, in the cloud, or in on the blockchain. And whoever is maintaining that dApp, or whoever is creating those interfaces between the consumers and the blockchain, will be in a position to charge a premium and attract economic capital, economic interest. So do you think do you agree with that sort of analysis, or do you think that there is something that needs to be hashed out, or
Yeah.
am I missing anything?
No pun intended on being hashed out for hashing algorithms and all the other stuff. And that was a cryptocurrency joke. My friends out there, I just had to throw it in. And so I think directionally the case you lay out makes sense. And in any uh, that said, but any industry has inefficiencies, and part of the game in life is how do you reduce the inefficiencies, introduce more efficiencies, right? And in different markets and in different platforms, that's easier said than done, okay? And just straight up replacing how millions of people all around the planet have their system in place, like, hey, I just use my Western, it works. And the fees, it works, so just getting people to shift their mindset overnight just isn't going to happen, okay? That said, there is certainly space, as you point out, for there to be a lower cost, faster way to be delivered. That said, and people, I mean, just last month, there was a chart I was looking at, and I did a presentation for a group in South Africa virtually. And so I was kind of researching what's happening there. Over the past year, there's been a 50% increase in transfers on cryptocurrencies, digital assets, of transactions less than $10,000, which in a way is saying, all right, up 50%. I mean, there's more of kind of the average person who's transacting. And I'm sure some of them on the margin are, rather than Western Union, they're using a cryptocurrency, right? Well, there's a different kind of education, and market adoption is hard. Change is hard. All of us resist change, okay? So yeah, there's great intellectual debates you bring up for how there could be more adoption, and I think there is, and there will continue to be, as long as people can transfer the money. The other side is there's volatility, there's price risk. Well, if I transfer my money from me to you and then I hold it, and I forget to go to fiat to pay my bills, because still most things have to be paid in fiat, they could also pay a big risk in what the price volatility is. But that's why there's solutions like Tether out there. They're like, how do we have a stable? So now is Tether the right solution longer term? I don't know. But what it
USDC is fully backed. It's regulated, and I
yeah,
would trust that coin over any other coin. I think Tether actually bring up a really good point. Tether was devised in order to provide that stability, and
yeah.
that's a fascinating, actually, cryptocurrency to analyze here, Bobby, because it boggled my mind. And here's why. Tether was created in order to give stability, right? And when I started in this space, it registered on exchanges, and I saw these tickers, and they were $1. You couldn't easily exchange it for a actual dollar, and you had to like go through different kind of avenues.
And
But
there's
once,
fees for that
yeah,
too, right? I mean, so
yes.
it's
But here's the thing, Bobby. I don't remember. I don't know if you remember, a couple of years back, or maybe a year or two back, they found out that Tether is not 100% backed by U.S. dollar. And you know what happened? It just kept chugging along as $1 equals one Tether, right? One U.S. Tether. So I think it's a fascinating sort of lesson there to be learned, is that if there is enough demand for a product, and if there is a perception behind it, that it's equal $1, then it will equal $1. So
well. Let's look at fiat. Okay, fiat currency is
10%
an
back.
imaginary construct that we as human beings created. It used to be backed by hard currency, which if it's gold, that, and I'm being very controversial here, I understand that, and some people will disagree, and some people are like, heck yeah, and I can't appeal to everyone. This is my personal opinion. But you know what? Gold is just a rock, and we were trained to say that rock is valuable, and it's valuable because it's scarce. Okay, fine, it's scarce, but it's also like it's a rock. Okay, and not everybody, it's not infinitely divisible. So there's a limit to what if gold was the only currency that it just, so we got to create something. And then there's the whole Bretton Woods debate and all this. And then now we're in a fiat world where guess what? Central banks can create money and destroy money like that. Now there's a lot of expectation and trust and faith, which is really important because ultimately that's what drives it. But
Exactly.
I've not done the math on this, but I would argue for me, and I imagine most people out there, that 99%, 95 to 99% of the money I will ever receive or spend, I will never touch. It's already virtual. Okay? I don't pay my mortgage in dollar bills. I pay it online through a bank account. It's digital, right? That's why there are reserve requirements with banks to say how much currency do we need to have to back it based on the average number of transactions or people claiming money. I mean, there's a whole revenue management model in that. Okay? So we're already in a virtual currency world, where it's just we believe in the system. Okay, it's a belief system. That's what money is. Okay,
Absolutely, I agree with you.
and crypto is a new belief system with new rules that some people in the old system don't want to let go of, and I understand that. But they can coexist. Man, we can all get along. Okay,
I-
there's a space that's being carved out for all these different currencies, and that's what you're touching on. So anyway, I get passionate about it, but I just
no, you're absolutely right.
it's the market. The market, well, the borderless democratization money. It's what you all think, listening to this and out in the economy, of what is the best solution for your individual needs, which are diverse across the whole globe.
This marks the end of our episode today. I hope you like the interview and the type of content that we're putting together. And if you do, please do not forget to subscribe, like, or comment on our videos. It really helps us a lot to build awareness about Slot Leader. I'm your host, Umed Saidov, and I will see you next time.